The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And today we got the FOMC coming on out. We had the pound dollar information that got released, came out with the meeting minutes. And we'll be going over that trade today. But also, I just want to make sure, again, you are aware of the FOMC interest rate, the monetary policy decisions, the outlook. Economic projections are going to be coming out. They'll also be having a press conference following the interest rate. So we should be looking for a pretty sizable move coming up here at the 2 o'clock release time. And then a further move, potentially at the 2:30, with the press conference with Yellen coming out talking about where she's standing on everything, where everything's at. And saw a funny little cartoon trader Esteban sent over to me today. Showing that Yellen was looking for the playbook on what to do about FOMC and QE, and he was like, "Yep, not giving you my playbook." So she's got to be figuring it out on her own, and so everybody's going to be watching to see exactly what she says and how it all plays out. And so we'll be looking forward to finding out how rock and roll. Usually, we get some pretty flat markets between now and about 1:45 or so, and then things pick up a little bit faster, and sometimes we'll get flat markets all the way to like that last minute. Be very careful if you're trading Nadex in those last, I'd say 15 minutes, especially the last 5 minutes, right before the release, because sometimes some orders can just start randomly firing off, and you can get caught on the wrong side of the trade. Maybe the right side, but it's just not the odds are not in your favor, okay? Too much potential volatility as orders start firing off. And so again, we're going to walk through those step by step with you and get each piece put together on how to take advantage of the FOMC today. And let me see what all we got going on. I'll get a few things opened up on here on the charts for you, and we'll get to rocking and rolling. But first thing, I want to do a review, and like I said, I'll have the charts up here for you in a minute. We'll just get a little technical thing worked out. But what we got going on the announcements, last night we had the pound releases come out at 5:30, and that was the climate count change. On the climate count change, came in at negative 34.6 on an expectation of negative 23.3, so which is good for the pound. The purchase facility votes came in at 009, which is what we expected to actually be released on that. So no big changes there. And we had the bank rate votes come in at 009, exact same as expectation. We had unemployment rate come in at 7.2 on an expectation of 7.2. Again, not a big change there. Average earnings index came in a little bit better than expected. So, when those kinds of numbers, those kinds of releases do come out, then what we're looking for on this, okay, is basically little to no move. And it's really important that you understand that when you're placing that trade, because if you go in and you try to do a straddle on that and everything comes in right at expectations, then the market isn't going to move that much, and you're probably going to have, at best, a break-even at straddle. And that's what I talked about, hey, you could look at the 12 o'clock. If it's really, really expensive, maybe an iron condor. If it's pretty cheap, we're hoping for about an 80 pip. We got about a 50 pip move on it. You should have came out okay on the trade. But if you hopped in and looked at an iron condor, maybe like right at 5 for the 7 o'clock expiration, or maybe even at 4 for the 6 o'clock expiration, then you might have been able to pull off an iron condor trade on that. And that's what we're going to be doing. We're going to be pulling up. We're going to be looking at these trades, and we're going to be seeing, what can we do to take advantage of the FOMC? Like, is it too expensive? Is it too cheap? and what is the best way to put together the options. With binaries, you have options. They are options. That can be good. It can also be a little bit overwhelming. And so I want to walk through them with you as I get the charts up and running. So we got right here. We'll just, like I said, I'll keep walking through some of this basic stuff, and I'll get my charts definitely up and running for you, and sharing through on Tiger TV there here in just a moment. And just a reminder, don't forget you can listen to us anywhere on your mobile phone at TFNN.MOBI. And you can also watch and listen at TFNN.com under Tiger TV. All right, so pound dollar announcement. Like I said, I'm going to have to come back and figure out what's going on here with the projector. But it's seeming like it doesn't want to do it, so I may just have to go in and force the re-download of the program to make it work. But I'm going to open up pound dollar. I'm going to walk through that trade with you. And before it's all said and done, we are going to tackle this FOMC. All right, so going in, and give me 1 second. I want to download the latest version and get that going, so that way I can open that up for you. Okay. So on the pound dollar, like I said, I'll walk through this trade right now, and then we're going to focus the rest of the show on the FOMC. On the pound dollar, and pardon me for my chart not coming through at the moment. Looking at the announcement from last night, we had the 5:30 release of all the news. So 4:30 Central, 5:30 Eastern. Okay, and it looks like we had pretty much a little bit of a burst up, came down, ran back up by 7 a.m., which I was talking about, really looking at those, really 7 a.m., 8 a.m. Eastern is when we got that real big peak. But it was, you're talking like 10 ticks difference. So from the pre-release on that trade, then let's see what we got on the movement there. And I'm going through and just, like I said, analyzing this trade for you. So I know a few of you were checking that one out. Usually it's a decent, move. I'm probably more of an Iron Condor fan than I am a straddle fan on it. But let's see here. Right there about, let's try to see what the best possible layout on that trade is. If we just look at pre-release, okay, right before the release, it looks like we were at a price of 1.6633. It popped up a little bit, came back down, and really did not get much of a movement right there. So it came on down to about 1.661. So we only got about 20 ticks of movement on that trade. But then it ran on back up. But again, from the pre-release, wasn't really an impressive mover. Closed 1.633, and we got up to, by 7 a.m. there, about 1.6643, so about 10 ticks up. Really not a great move. Now, that's if you just hopped in right before the news. Okay? Now, the big move happened previous to that. So one of the big things I talked about is, you could hop in right before. Usually I hop in these pound trades at night. That's when I'm hopping in on them, taking advantage of them. And I usually look at around midnight. Okay? So if we're looking at midnight, what kind of move did we get? And at midnight, there was pretty interesting. There was this big drop in the pound. And late in the evening, but then going into about midnight, it was pretty flat after that big drop. It came down around 8:30. And let's see here. Right around midnight, we're sitting right around 65.90, okay? And then we got the spike up, 65.90 to 66.40. We got about 60 pips total on the trade. That's pretty much all we got out of it. So unless you got it pretty cheap, then the trade probably did not work out that great for you on a straddle. Now, if we take it from the midnight release and we look at the Iron Condor, which is, like I said, often my preferred move lately on a lot of these pound trades, then we're looking at 60 65.90. We take that to 7 a.m. to about 66.30. Got about 40 pips on that. You probably would have brought in somewhere. My guesstimate is your cost is about $40 to $50. You probably would have been about break even on that trade, holding that trade all the way until expiration. Okay, and that should have hopefully at least worked out as a break even trade for you. Really, almost in either direction. You should have either made a little or lost a little, but shouldn't have really been just a big impact on your trading account one way or the other. So, which is okay. So as long as you're keeping that money around, so you can hop into the next trade. And all right, let's see. Good, this is starting to open up now. That's what I've been waiting on. And okay, so give me 1 second, and I'll have charts up and running. I just went and reinstalled the entire program, so I figured that'd be the fastest way. Program's not working, just reinstall it. It's amazing how many problems that can solve. And here we go. Ought to be seeing my screen now. Okay. This will make the whole show a lot more entertaining. Now, let's get on to the FOMC. And right on here, we're going to hop on over to Forex Factory. We're just going to look at that. And then we're going to go in and we're going to check out the news announcements, what times they're coming out. Just a FYI for you, this could also have a little impact. The SNB, the Swiss National Bank, chairman is going to be speaking in a panel discussion and against the moral hazard lessons from the financial crisis. So that also, depending upon what he says, could have a little impact, obviously on the franc, which dollar franc, so therefore could impact the dollar, could impact all dollar pairs as well. So that'll be something else that's happening in the meantime. So that's another 15-minute warning for you, like I talked about, that ought to give you even further, caution going into that 15 minutes. And what we're going to do now is we're going to pull up some of the pairs. We're going to talk about some of the expected movements that we get on the FOMC and go, okay, well, with these big moves that do happen, what is the best way for us to take advantage of them? First step, if you haven't done it, hop on over to TFNN.com. Then go ahead and click on the Nadex banner right there on the right side of the page. After you've done that, what I want you to do now is click on Trading and then Demo Trading Account. Fill in your username that you want, your first and last name, phone number, email address. Then check your email right away after you hit Submit there. And what will happen is you'll get an email where you can log in. And you can try this out in demo and follow along. And it's just a good learning experience. So I love trading the FOMC. You just got to look for the right opportunities. So we're going to see if we can find them. All right. Be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoads, Basil Chapman, David White, Larry Pesamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back to the Diagnostic Trading Hour. We got Mark from Tennessee with a question about gold. How can I help you out, Mark?
Hey, hi. I was wondering how you think gold's going to react to the FOMC meetings talking points.
It's going to go nuts. That's about all I can tell you. I usually don't really try to trade directionally on the FOMC. I trade either neutral or I trade breakout. So I do like straddles or strangles or iron condors or butterflies right on the FOMC announcement. Because you can get a 30-point move in gold in a matter of in a matter of 5 to 10 minutes. And if you're in the wrong side, that thing can blow. I don't care if you have a stop loss; it can blow right past it. So it's a really dangerous time just to hop in and place a trade. Trying to pick the direction on it.
But with the past history, when the announcement is QE3 is going to be reduced, definitely that has been an effect on a negative side for gold's price. Do you recall that?
Right, because by reducing QE, what you're doing is, the initial reaction, that'd be accurate, because what you're doing by reducing QE is you're increasing the value of the dollar because they're not printing as much, supposedly. And therefore, by increasing the value of the dollar, that's going to make it take less dollars to buy gold, therefore driving down the value of gold.
Okay, that's what I was looking for.
So, I'd be looking more, if I was going to trade gold directionally, if you were really going to, I don't know if you're talking about GLD or if you're talking about GC, but if I'm going to trade gold directionally, I'm probably going to try to grab a piece of the spike, okay? I highly expect that, yes, they're going to continue doing another, 10 in quantitative easing. If they did 20, it'd be a massive fall. We'd get like a 100-plus point day on gold.
What did you say? How much? What did you say? 40?
No, if they did 20. So if they surprised the market, it's very unexpected. I'm letting you know that there's 3 scenarios, okay? They're not going to continue QE on this announcement. They're going to continue to do 10 more on QE, or if they did 20 on QE instead of 10 on QE in this announcement, or they cut back the quantitative easing that they're doing. If they did 20, we'd have a massive, we had a drop, but we'd have an insane drop. The dollar would get a lot stronger against all the other currency pairs. If they didn't do it, the dollar would get, weaker, and gold would get stronger. So,
can I ask you? You think there might be a strategy to surprise the market, and in a sense, maybe it might be a surprise to Putin, in a sense, to make the dollar stronger in a way that somehow this could be effective at hurting him?
I guess there could be. There's always a strategy. It's just you never know what it's going to be till it happens. I'm just being, real as a trader. They're definitely. They could try to play this in and figure out how to mess with the dollar, to mess with, Russia and everything else. There could be a lot of stuff built into that. I don't think that's going to be their guiding principle right now. It's too volatile as it is to try to mess with it right there. But if they wanted to strengthen the dollar to further weaken their currency, that would be a way to do it. So, but to strengthen the dollar, that would actually be expediting QE. That'd be like, if we saw like a 20, that would be what they're doing, and that'd be why. It would be due to international policy, and they're trying to sort of, kick Russia where it counts. So.
Yeah, right. Well, kick them anyway. I don't care.
So, yeah, exactly. I'm right there with you, man. Now do 30, do 40. Let's go for it. Let's just take it all out. But that'd be a currency war. And that'd be doing that. That'd be one way to know them. It wouldn't totally destroy them either way, but it definitely would have an impact. That would probably be the one reason I can come up with why they'd actually do 20 instead of 10. So.
Okay. Well, thank you.
Yeah, you bet. And if you are trading it, definitely check out the Nadex stuff. You can even use, you can't use the dailies or the intradays, but you can check out the weekly contracts if you want to trade gold going into the announcement. So there are some ways to trade it with capped risk. No problem, Mark. Thanks. Have a great day, man.
You too.
Awesome. All right, so here we go. Let's check it out, and let's get everything up and running. So what we're going to do is we're going to dive in, and as much as I love gold, if Nadex had gold that ran until 3 o'clock on their intradays and dailies, I'd be all over it. You can do the weeklies. They don't move as fast. If we get a massive move, yeah, they can be fantastic. But, unless we just see like a really, really big move, then there's just not going to be that much there. And it's sort of interesting. They're already, the dailies are already sort of dying out here. We only got a minute left. They'll be gone, and gold will be shut down for the day. So what we want to do is we want to go, okay, let's check out the currencies, and let's look at the big currency movers, okay? And what I want to do first is I'm going to bring up the spreads right when we get back from this break, okay? And we're going to see if there's any iron condors on the spreads. I'm going to be focusing on my pound pairs, my euro. So that's usually where I expect the most volatility. And then we're also going to be looking at some potential strangles as well to see what might be in store. Stay right there. I'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Okay, so checking a few things out to sort of seeing what we got that might work out for us. Okay, and one thing I'm looking at right now is what are the lowest moving pairs during the FOMC? Okay, and by looking at that, I'm actually able to find that the US yen actually is the one that usually moves the least. 33% of the time, it breaks 50 pips. The average move is 51 pips. So that could make for a nice, iron condor setup. And so what I do is I go in and I can buy the lower and sell the upper spread. Okay? I can do that for about $38. So let's say it does just move its normal 50 pips. Okay, I lose $12. If it moves a lot further, I do have a larger risk. Okay, it could. I can only make 38 on the trade, so I would be risking 62. But if it flies up and comes back down by 3 o'clock, okay, then anywhere inside that, 38 pips above where the market is right now, or 38 pips below where the market is right now, every ticket's within 38 pips of 101.60 is $1 that I will make up to $38. So I'm going to put this on as my first Iron Condor, the 100.60 to minus 101.60. I'm going to put that trade on right there. I'm going to sell the 101.60 to 102.60. Again, I'm doing the 3 o'clock expirations for this trade. Okay, that's the 101.60 to 101.60, where I am buying the contract, and the 101.60 to 102.60, where I am selling the contract. All right, so that gets us caught up on that trade. Now we're going to dive a little deeper, see what else we got, and see what we can find over here on some of the other trade setups, and what we might be able to pull off is maybe also doing a straddle in case it does break out. So let's say it stays flat, that's going to bring in like $38 for us. Okay, what I really want is I want to make a lot of money on a big move, right? I'm hoping we're going to get just a big blast off, takes off market, and the one I can make the most on would actually be the pound dollar, because the pound dollar has the widest spreads I can look at. We got 150 pip wide, and we got 300 pip wide on the pound dollar. So it has the widest spreads that I can actually trade for the intraday and the daily on the Forex pairs. Now that can make it more expensive or less expensive depending upon what I'm looking at. But so now that we got that piece done, and looking at the pound yen, so I'm not totally sold on that one yet. I'm just got it up there. I'm watching it. But you can put on right now about a $50 move on that one. The problem is on the pound yen. We're going to come back to the pound dollar here. On the pound yen, and if I pull up and I look at the stats on that release, we let's see, what do we get here? We're getting, last time we got about 45. The time before that, by 3 o'clock, we got about 130. Okay? Time before that, we got about 40. Time before that, we got about 40 to 30. Time before that, we got about 30. Time before that, we got, let's see, by 3 o'clock, it actually ran down at the last minute, down to 20 after it went up 100. About 45. That's not actually bad. So looking at the stats on the pound yen, it actually looks like it's a really good candidate as well for an iron condor. I'm actually going to go ahead and pick this one. I'm going to grab it right now. I'm going to buy the 168 to 169. Okay, spread, 3 o'clock expiration on the pound yen. I'm going to sell the 169 to 173 p.m. as well on this trade over here. And put that trade on in. And so we'll have that trade all done, up and running. So that'll be a couple of the very simple trades that we can do over on Nadex, and hopefully you're able to follow along. I know this goes sort of fast, and I'll even throw them on demo for you again just so you can see me actually go through all the trades. But let me throw them up in. I got the lives already going, and I have another account where I do more, but not another account, but my main account where I do it. I'll throw one on, and then I'll do whatever size I really want to do on the other side. But so here on the pound yen, and let's see, what was the other contract with the 169 to 170, and we had the 168 to 169. Okay, so let me pull that back up. Yeah, they're a little bit they vary, looks like right now over on the pound yen. That's a little annoying when they do that. Sometimes they have a little bit different. There we go, 168 to 169. That's what I want. Okay, 168 to 169. And we're going to buy the lower one. Okay, so we're buying that. And we'll put that one on. Okay. And then we're going to go look over here. Make sure, 168 to 160. Yeah, that's 100 pips. Okay. And let's see here. Want to add them up. I want to make sure we got the exact prices we want before we just grab them again. And on that one I got 168.80. It's sort of moving up on us already. May give that one a second before I hop back in on that demo side. And then we're going to go 169 to 170. Okay, we're getting a nice decent premium on that one, selling that side. There we go. Okay. So between the two, we ought to be pretty good. So bringing in about $500 on the trade total. Okay. So there we go. All right. So placing that order right there. That one's in, and that one's done. So I'll close those out. And again, we got the 168 to 169. We bought 169 to 170. 3 p.m. We sold. Now, let's look at the pound dollar. So we got a couple of iron condors on. Those are our flatter rates, and I mean, we can literally walk through every single pair. If this show started about an hour earlier, man, we could just knock out each one at a time. Euro yen, also a pretty flat mover. Just looking at the interest rates across the board by 3 o'clock, that thing's usually moving about 20 to 30 pips. So the yen is sort of our flat pair during this interest rate announcement, and I just can't stay away from them. I think we're going to have to go ahead and we're going to have to pick a euro yen also. So let's see, let's go up here. Let's find the euro yen on the scanner. It's the only way you can do this many contracts this fast. And add it on there. Pound yen, pound dollar, US dollar, euro yen. Okay. And to make it easy, what I do is I put 0.5 in my risk reward filter at the top. And then I find I invert it. It's a lot easier for me to do it that way. I'll find the 100 pip wide, and then that's 142.30 right there. So I want to find the 141.30 right there. That's obviously not going to do any good. There's only $4 a premium in that because it's so deep in the money. Let's see, what else do we got? 141. There's another 141.30. That's the 2 o'clock. That's why that's not going to help. There we go. Okay, $50, $100 wide. Barely ever get a 100 pip move. Okay, so that's definitely the trade I'm going to go for on that one. And so we're going to buy on that one, except for, again, I'm going to sell it, okay? I'm selling the upper. It's really important you understand this. I'm selling the upper. I'm buying the lower, okay? So, selling the upper, buying the lower contract. Notice it's 141.30 to 142.30. I'm selling that one way up here. And then I'm buying the lower contract, okay, which is 140.30 to 141.30. Buying that one down here. We got that. And basically expecting that we're not going to have more than a 50 pip move between now and 3 o'clock. Now, it may move 50 pips, but I don't expect it to expire more 50 pips. Now, that's all yen pairs, okay? No dollars in there, all right? Pound yen, euro yen. We do have the dollar yen, which is one of the weaker ones. But pound yen, euro yen, usually pretty weak. Let's see here. I'm just trying to see if there's anything else that we just can't resist that we want to take advantage of. Let's see. Euro, pound, like 10 ticks, 20 ticks, 8 ticks, 25 ticks. I mean, just asking to be taken. So now I have. We don't have the spreads on euro pound. I forgot they only have those on the binaries. I'm going to leave that alone. We're going to leave the euro pound alone. Okay, now let's go ahead and hop on over. Let's actually, this time for real, let's check out the pound dollar. This moves fast because, well, it's FOMC day, okay? You can go back, you can find the archives of previous FOMCs. I'll do iron condors before, iron condors into. I'll do straddles, I'll do strangles. We'll do a lot of varieties of trades. This is just to give you a sample of what's possible on Nadex during FOMC. All right, so what I'm looking at now is I'm looking at pound dollar with the federal funds rate. I'm just trying to find, what really is going to be this big mover for me to see if I think it's actually a good idea. And we've had some big moves. But on the pound dollar, I'm looking at January 29th, 35 pips, okay? From release to high. We got about 30 pips on December 18th. Looking at October 30th. It almost seems wrong, the charts I'm looking at. I'm just flying through. September 18th, we got, now that was a big day, we got 75, okay? July, 25, 30 pips, and this is right off the FOMC, 25 pips again. So I'm just going through here. I'm trying to go, hey, is there anything I'm missing? It can't be this bad, and, again, we're going just for the 3 o'clock, but I think what we might be able to do, if I go in, change up a couple of views and to see what kind of max move can we really go for on this thing. But, yeah, 25, 30, 25. Massive move on September. Okay, so in September, we had this big 150 pip move on the pound dollar. But that was the exception so far. We had 60 pips in July. All right, in June, we had a massive move, 178 pips. Okay, then we had 40s and 30s. 25s, so 15, 25, over and over again. Really, I'm only seeing one that was more than 100. Let's see, 2 more than 100. 2 out of the last 12 months has the pound dollar actually moved more than 100 pips. Okay? One of those times it moved 70 pips. So 9 out of 12 times you would have been profitable had you done an iron condor. 3 out of 12 you would have been profitable if you done a straddle. So that's really important to consider when you're looking at these trades and going, how much are they pumping into these things? Is it worth it? Okay? And, we can look at a lot of different things on them, but let's see what we can maybe do on the pound dollar itself. So on the pound, I want to look at, all right, what is my cheapest straddle for 3 o'clock? Okay, so I got all these 3 o'clock expirations coming up on pound dollar right here. Okay? And I'm like, well, that's $152. That's not going to work. That's $77 by 71. That's probably a middle spread. So right there, yeah, that one's like going like way through. So that's probably not going to do me any good at all. We can check it to make sure, but I'll just uncheck it. You actually see the highlight of the graph. But let's uncheck that and uncheck that. Actually, it's right in the middle. So that's not going to do any good. That might as well just be buying or selling the pound dollar. So really, we got this $27 one here, this $27 one here. What I want to point out to you on this right now, this is probably one of the most important things that you can learn when you're doing iron condors or spreads. And we have the same thing going on down here, right here, and right here. Okay? Let me zoom out a little bit on this because I really want you to see this. If you're doing an iron condor, okay, you're really going to be doing the opposite of what I'm looking at. Instead of buying, you're going to be selling. Okay? You're going to want the narrower spread. And notice how both these spreads have a $28 risk on the buy side. Okay, so this one right here, that one right there. Both of them have that same risk. Okay? I mean, maybe give or take $1 here and there, but they have the same risk. One can make a lot more than the other. So if you're doing a straddle, you want the one that's going to make a lot more because it can move further. If you're doing an iron condor, you want the one that at the same time cannot, okay? Does not have as much profit potential because remember, invert that on an iron condor. You're selling it instead of buying it, okay? And so that means you're going to be going down here. You're going to be finding that 66.40 by 67.90, and which means you're going to have to get rid of all your filters to be able to find it. And let's get rid of all the other instruments too. Okay, so if we're going down here and we're trying to, find the 66.40 by 67.90, that means we're selling that one. Okay? Instead of buying it. So I could buy that one, I could sell that one. Okay? And then we're going to go in here, and this is sort of a cool little setup we're going to do, if you can follow along. And then we're going to buy the wider one. Okay, so we're going to sell this one right here, and then watch this. This is really cool. We're going to combine 4 of these pieces together, and we're going to have a pretty sweet trade set up here in just a second. So stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhoads, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhoads Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so got the pound dollar up right here. We got this last trade we're going to be able to throw on. You're going to have to make your choice. You can put on both and watch out how both of them play out, okay? And just demo this. Learn how to trade this. You'll start seeing how the pieces come together, okay? But we got 150 pip wide iron condor right here, okay? And we're bringing in $50 on that iron condor, or about $45. And then, let's see here. So we got bringing in 20 on this one, 25 on this one, about $45. And then we have a $60 straddle. Now, one might be tempted to do both on purpose, okay? But you're going to bring in 45. You're going to risk basically $55. And unless it breaks all the way out of the 150 pip wide one and takes max loss, you're not going to start making any money. And we've only seen it break out that far. Like I said, over 100 pips, and I think only one of those is more than 150 in the last 12 months. So the likelihood of that happening is really low. Here's what I am personally more likely to do. Okay? either one, I'm going to go with, remember I said I like the narrower strikes on the other pairs for my straddles. I mean, for my iron condors, because these are 150 wide. That's why I did pound yen. That's why I did euro yen. That's why I did US yen, because they're not 150 wide. They're 100 wide. Okay? And then for my straddles, I want to make the most amount of money. So that's where I'm going to go over here, and I'm going to look at this one. And yeah, it's sort of expensive. It's about $60. But remember, I did a bunch of other iron condors on less wide pairs, less volatile pairs. So what I'm going to do is I'm going to hope that it does break out. But if it stays flat, I'm making money on my other iron condors. If it does break out, and it breaks out on everything, which would be really randomly weird, then I could profit enough on the straddle to cover the iron condor losses. Okay? So I'm literally going to go in here. I'm going to do the straddle on my pound. And I'm going to go usually a little heavier on my iron condors on the other one. So I'm just going to do 10 right here. Okay? Remember I did quite a few. I did US yen, I did pound yen, I did euro yen. I'm going to go in this. This thing explodes, though. There's a lot of money it can make if we do get one of those 170 pip days, I'm going to place that order. Go in there. I'm going to grab those. I'm going to hop in here. I'm going to sell these. Now I'm buying the upper. I'm selling the lower. Okay? Again, buying the upper, selling the lower contract. I bought the 66.40 by 69.40 contract. I sold the 63.40 by 64.90 contract. So with about $50, $60 risk on that trade. And then I have quite a few other contracts on as well that we're looking at potentially taking advantage of over here. We got a whole list of them. And this is basically the list we put on right here. We got the euro yen, we got the pound yen, we got the pound dollars. All these trades set up and running right now that you can hop in and you can take advantage of. And I know that's really, really fast. I'm sorry. This show flies by every time. But anyways, we're going to see how they work out. But as crazy as FOMC is on the indices, it's usually not as crazy as it feels like if you go and you start measuring trades like this. And if you get it down, if you'll start watching it, if you'll start looking at the historical patterns and how far it moves, you can expand this out into things like indices. Okay? But usually it flies up. If you think about FOMC, here's what happens. Flies up, flies down, flies up, flies down. It doesn't necessarily go anywhere. Occasionally it will just take off by the end of the day. But I'm talking about during just the next hour. Okay? You usually get a crazy up and down move. But you don't get a whole lot of commitment most of the time. And that's what we're trying to take advantage of. But just in case we do get just a ballistic flyer, I want to throw that straddle on also to cover my iron condors over on the euro yen, the pound yen, and all that. All right. Good luck in the markets, and we'll follow up on this tomorrow. We'll see how it all went. Okay? Stay right here. We got another great show coming up for you right after this. Bye.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.